Welcome to Catalyst. I'm Seana Smith alongside Madison Mills. 30 minutes into the U.S. trading day. Let's get you the three catalysts that we're watching this hour.
First up, we'll break down Nvidia's earnings and what it means for the artificial intelligence trade.
Plus, is the agentic AI trade gathering steam? Salesforce earnings not looking like a strong indicator.
And Tesla wiping out its post-election gains, dropping below $1 trillion in market cap. More details ahead.
Let's take a look at the moves that we're seeing in the broader market here, just about 30 minutes into the trading day. You're looking at gains here, at least for the Dow, still holding on to that movement to the upside, looking at a rise of just about 0.2%. But you do have the S&P and the NASDAQ now in negative territory. You look at the tech-heavy NASDAQ off just about 1.3%. Some of the selling across some of those larger cap tech names. Nvidia out with its results last night. We initially saw some buying activity, some optimism here ahead of the opening bell, right at the open. Right now, though, we are looking at losses of just about 3.5% in Nvidia. That, of course, is also being reflected in some of its competitors right now, as you do see some pressure across some of those other larger chip names. Taking a look at the bond market, we know lots of activity we have seen there. We are seeing a bit of a move to the upside here, but still, you're looking at the 10-year yield right below that 4.3 level at 4.29. Let's talk about Nvidia, because Nvidia shares are moving to the downside. Other chip names are doing that in tandem as well, following another quarter here for the multi-trillion-dollar chip maker. While CEO Jensen Huang did tout strong demand for Nvidia's Blackwell chip, analysts are raising some concerns about the company's gross margins outlook, citing some pricing pressure and potential for fierce competition as headwinds. So how should investors be thinking about the future of AI? We want to bring in Paul Meeks. He's the Chief Investment Officer at Harvest Portfolio Management. We also have Sinan Aral. He's a professor at MIT. It's great to have both of you. Paul, let me just go to you first here, because we're looking at losses right now, just about 3.5%. Very different than some of the movement that we saw here this morning. I'm curious, just help us make sense of some of that selling action that we're now seeing.
So I think the quarter was pretty strong. I don't think any near-term gross margin pressure comes from pricing or from competitive threat. It comes from the natural manufacturing ramp of the Blackwell chip. And I would say that the guidance that they gave for 71% gross margin, which is still pretty impressive for any American company or any company anywhere, but it is down from 75%. I don't think that they could give us a confirmation that 71% in the April quarter, this quarter, was going to be the trough. So that's a little bit of a disappointment. But I think a lot of the action today is just more anxiety about the world of Trump tariffs. Overall, I think this company will, in the second half of this fiscal year, continue to reaccelerate sequential revenues, particularly in the data center business, which is 91% of their total revenue pie. And so I'm very confident.
So, Paul, just to put a button on it before we move on, the degree of selling we're seeing, Nvidia hovering around losses of about 4% right now, you would attribute that to President Trump reaffirming those tariffs on Mexico and then adding an additional 10% tariff on China?
Yes, I think that is a factor that even when Nvidia gave their guidance, couldn't incorporate, right? Unfortunately, it's an unknown. But then the other worry, as I said, about Nvidia is a fear that this quarter's gross margin at 71% will not be the trough. So I think those are the only flies in the ointment. One is geopolitical macro. I can't control that. I feel very good about the Blackwell ramp. And so I think it's going to be a trade today, mostly on the macro, that are going to take things to the downside. And it's essentially a risk-off trade today.
So now I'm curious how you're looking at the results that we got last night, in particular some of the guidance that we did get from Nvidia, just in terms of that strong demand. They don't see that stopping anytime soon. What does that tell you just in terms of where the focus then should be for investors as we talk about that next phase of AI adoption?
Seana, Madison, thank you for having me. It's good to see you both. Nvidia had a reality check with DeepSeek. Everyone was talking about whether this was the end of large data compute. But those of us in the know that this is in no way a real threat to the demand for compute. as efficiency gains like DeepSeek are found in training, you move to needs for compute in other areas of AI like inference. And in fact, efficiency gains allow widespread adoption of the technology because it becomes more cost effective, easier to adopt. As that widespread adoption happens, there's more demand for compute, more demand for NVIDIA's chips. This is sometimes called Jevons paradox, which Satya Nadella talked about actually recently. Also, the models are getting more complex. The hardware is getting more complex. This is creating the profit margin pressure that Paul talked about, but it's also creating demand for compute. Because as we move from more basic language models to reasoning models, they require more compute and more demand for these types of chips. And finally, the agentic age, which I think you're going to talk about a little later on. We're moving from AI that simply gives advice or guidance through language to AI that can make decisions and actually take actions in the world. And as we move to this more complex environment, the demand for compute is only going to continue to grow. Demand for data centers, demand for chips only going to continue to grow. I would say one thing, which is the thing that investors and companies like NVIDIA need to think about are potential paradigm shifts in the paradigm. So there I'm talking about quantum, there I'm talking about photonics. Obviously, we had a major announcement from Microsoft in the Majorana chip that they put out. These types of things could change the game.
Paul, I want to go back to you here because this conversation is happening in the context of the Mag 7 ETF being in correction territory, down 10%. Given the reaction we're seeing right now playing out in Nvidia stock, again, still experiencing some pressure this morning, does that change your investment thesis when it comes to market cap weighted investing versus an equal weight investment approach?
Well, we've definitely seen a broadening out of the market, where for a long, long time, the market cap weighted S&P was crushing the equal weighted, but now we've seen, both are in sync, and actually the equal weighted, at least 2025 to date, is outperforming. So yeah, I think it deserves to be a broadening of the market. I'm not a problem with that. As it pertains to the Mag 7, for the longest time, particularly as I play this AI theme, I have only been interested in Meta, Amazon, and Nvidia. I've actually been away from some of those other stocks for some time.
Paul, when you take a look at, I guess, the opportunity then, more broadly speaking, given just the uncertainty coming out of Washington, given this whipsaw effect, given the fact that so much of this AI momentum story has hinged on Nvidia specifically, it doesn't sound like you've heard anything in the call last night or anything in these results that necessarily changed that investment thesis, right?
No, and remember, I'm saying that the key culprit among their financials that they reported and guided to, gross margin going from mid-70s down to low 70s, I don't think it has to do with pricing. I don't think it has to do with DeepSeek or any other threat. It is the manufacturing ramp and an underutilized fab. And so as that chip, the Blackwell, ramps, the gross margin will come back. And I think by the end of this fiscal year, which ends January 31, 2026, that the gross margin will be back in the mid-70s. So I'm comfortable.
And Sinan, to go back to you here, you mentioned a little bit about quantum computing, and obviously Microsoft had a quantum announcement with the Majorana chip. We also had an announcement from AWS on a quantum computing chip. Is that a potential headwind to NVIDIA in your view?
It depends on how quantum plays out. Obviously, it is a different paradigm for hardware. It's a different paradigm for chips. But let's not forget that NVIDIA is also investing deeply in quantum. And so we'll have to wait and see to understand which companies win there. That is not a short-term reality. That is something that investors need to continue to look at long-term and understand where each of these companies plays in terms of its strengths and weaknesses in quantum. That is one of those events where as we see quantum develop, it could change the nature of the chips and therefore change the paradigm. But all of these companies are investing deeply in that possibility.
All right, Sinan and Paul, thanks so much for joining us here to break it all down. We really appreciate it.
Thank you.
Thank you.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of this session. You can do that all at Yahoo Finance's trending tickers page. First up, let's take a look at shares of Vistra Energy. You're actually looking at losses of just about 4.5%. They're pulling back from some of the earlier gains that we initially saw. Now the energy company beating fourth quarter earnings expectations, reiterating its full year guidance. Vistra was one of the top performing stocks in the S&P last year, expected to benefit from the increased energy demand from AI data centers. And Maddie, when you take a look at the move today, at least to me digging through this report and maybe the initial reaction, not so much a fundamental concern that's really driving maybe the share price action today, but you have to remember, and like we just said, this was a massive outperformance last year. We saw a huge run up in the stock. A lot of that could be just a give back here to the fact that guidance wasn't even stronger than initially stated. I think that could be one of the drivers here that we are seeing to the downside. But again, you're looking at shares still able to hold above that 141 level. It's
really interesting. As you were talking, Sean, I was pulling up a chart just to take a look at the action today, because we saw this share price hitting as high as 152 earlier. Now we're seeing a decline, perhaps a bit in sympathy with a bunch of the other chips names that are also under pressure. But to your point, of course, there was some weakness under the hood of the print. It was interesting, though, to see a little bit of a turnaround story here, too. Last year, they lost $184 million. Now they're reporting net income of $490 million. They've got those 3 nuclear plants that are diversifying them as sort of this nuclear play. They are the second largest owner of nuclear beyond Constellation Energy, which is, of course, the first largest owner of nuclear plants. But again, it's been interesting to see kind of these diversified energy plays and utility and nuclear plays like a Constellation and a Vistra getting so much attention in 2024, and a little of that coming under pressure. And interesting to just see the movement in tech names today in general, I think weighing on the broader averages as well. Next up, Warner Brothers Discover shares surging as big expectations for its streaming growth offset a slight miss on revenue. The media giant added over 6 million subscribers to its flagship Max streaming service in the fourth quarter, bringing it to a total of nearly 117 million subscribers. The company saying it expects to reach 15 million by 2026, driven by White Lotus viewership, I'm sure. But you've got nearly 6% gains on the stock right now. I'm going to point out some things that our entertainment reporter Ali Canal sent over to us. She said the subscriber guidance was probably the biggest catalyst for the moves here. Also, she noted the adjusted EBITDA coming in higher than expected and said she thinks earnings might have been above from the commentary that she is reading, but she also pointed out the slight miss in revenue as something to keep in mind.
Yeah, and what's interesting is just the discounting that we're seeing of that. It doesn't look like that's a focus at all here from the street. Very much more of the focus on that optimism and some of the momentum and strength that we are starting to see within the streaming side of the business. And that really does seem to be the focus, and why we are looking at a gain of just about 6%. When you take a look, that's a 5-day move. When you take a look at a longer term chart here of the company, you can see there has been a lot of uncertainty baked in up until this point, just in terms of what that path forward looks like for Warner Brothers Discovery, how, I guess, to what extent they're going to be able to compete with some of the strongest competition within this space. But when you take a look at these guidance, or when you take a look at the subscriber numbers that we did get here for the most recent quarter, when you take a look at the 150 million subscribers by 2026, really just highlights some of that expected momentum that they continue or expect to see here in the quarters to come. And I think that's really driving much of that excitement that we're seeing play out on the street.
Absolutely. Yeah.
All right, we'll keep it right here on Yahoo Finance. Coming up next, it's Salesforce seeing slower adoption for its Agentforce platform. We're going to break down the company's results. That's next.
Salesforce issuing a weaker than expected fiscal year revenue forecast hit by slower adoption of its Agentforce platform. That new AI tool is expected to make only a modest contribution to revenue. Joining us now, we've got Brent Bracelin, Piper Sandler Equity Research Analyst, Cloud Software and Analytics. Brent, great to have you here. You got a slight price target revision down to $400 from $405, so very slight there on Salesforce. Does Salesforce have an AI problem?
Actually, no. I think you're having a little indigestion today with what looks like a very tepid guide for Q1 and the full year. But if you put the AI opportunity in context, we estimate the data AI business grew over 30% sequentially. That's an acceleration on a sequential basis. Year over year, they talked about 90% growth in their data cloud business. The data cloud and AI business now is talking 120% growth. So that's an acceleration. I think the disappointment is squarely centered really around tepid guidance. I will remind you that you do have a new CFO here, new COO. Not uncommon for companies to guide conservatively when you have new leadership. I actually think this is a great opportunity here, and they sound very bullish around the opportunity around Agentforce, around AI, and we're quite bullish around the AI opportunity in software. Recall, we spent the last 2 years building out this AI infrastructure, buying GPUs, building clusters of GPUs to drive these foundational models. We're in the top of the first inning here relative to AI having an impact on the software layer, and it's starting to happen. You're starting to see it. It's slow, but it's starting to happen.
But what does that quote unquote more meaningful contribution then potentially look like? If we are seeing a bit of a conservative guidance, what do you think maybe that more realistically could look like in the quarters to come?
I think one small example that Benioff gave on the call last night was a $20 million contract where one large customer contracted $7 million of the $20 million contract to Agentforce. So that hints at how meaningful Agentforce and agents can be as a revenue driver for Salesforce. So I think you have early signs. I know investors want to see a real monetization out of the gate. It is happening. Tripling number of paid Agentforce customers in just basically from December to January. So really good momentum here. It's just going to take time. AI monetization is going to happen differently in applications than it happened in the infrastructure side. So be patient. The good news is the multiples in software have come in for 3 years. And so now you're looking at the opportunity to invest in an AI beneficiary that will take time, but at a much lower multiple.
I also want to talk to you about Microsoft, the company urging President Trump to ease the limits on chips that can be used in data centers for training these AI models. Talk to me about your outlook for Microsoft when it comes to their ability to withstand any potential headwinds from tariffs and any headwinds that could come from entering into a back and forth with this administration.
Sure. I mean, Microsoft obviously is also seeing early stage benefits of AI in the app layer. You're now talking about a $10 billion plus business growing triple digits as well. They were a first mover here around AI. And what they're really, I think, trying to do here is try to prevent and limit the amount of regulation the government is doing here and stepping up to try to potentially slow adoption. So obviously, export rules are one of those regulatory governors that could limit adoption. Obviously, in an ideal world, you wouldn't have government stepping in, a policy stepping in here and slowing adoption. But again, I would point to the early tea leaves on Salesforce, the numbers we saw out of Microsoft around Microsoft's AI business, and even Snowflake last night as further evidence saying AI is starting to show up in the application layer and these software names.
I guess, Brent, how should investors then be factoring in the uncertainty coming out of Washington, just in terms of the ability or potential that it could handicap some of that upside momentum that we've seen?
You're seeing that now, right? Microsoft's down 5% year to date, 15% below the high. Mm-hmm. Salesforce is down 11% year to date here based on the sell-off this morning. So you're seeing very tepid guidance out of these companies for the year. I think that sets up where we're baking in the risk around government potential delays and DOGE efficiencies and a slowdown in orders in that world, baking in some of the risks around FX uncertainty. Currency is actually now starting to be less of a headwind based on what we've seen over the last few days here. So I actually like the setup on software because the multiples now bake in some of the risk around regulatory change, policy change. It's been an overhang on the group, could remain an overhang for the next quarter or two. But again, we feel like in 3 quarters, you're going to see AI momentum start to build here and start to drive a change in the growth trajectory of this business. you're going to see it first at Snowflake. They're actually guiding to an acceleration in growth. I think that could happen at Salesforce later in the year as well.
I want to end by talking to you about Snowflake. Huge jump this morning, up 13% in their biggest gain since November. Coming off of that just a bit here. What is your base case for Snowflake?
Yeah, a bit of a broken record here for me. Talking about AI coming to the application layer, coming to the software layer. Snowflake, for the first time in 3 years, is guiding their product growth to essentially accelerate into the second half, exiting Q1 here. So base case scenario, $4 billion business. This is a data software layer. The first area people are going to spend, large enterprises are going to spend, is cleaning up their data estate. That's essentially what Snowflake's really good at. Sridhar, new CEO, stepping in here, essentially scaled the ad business at Google to a $100 billion business. He's now leading the charge at Snowflake. You're now anniversarying his first year at the helm, and you're starting to see a very tight focus on product execution. 400 new features they've added in the last year. Now they're going to focus on taking some additional scrutiny on go-to-market and really putting more pressure on those sales efforts to try to sell all these new products that they've come up with. The change for them, what's driving the acceleration in growth is AI. They have added 6, 7 new products specifically aimed at driving and attracting more AI workloads onto the Snowflake platform. That is now starting to happen.
All right, Brent, great to talk to you. Thanks so much for breaking it all down for us. Really appreciate it.
You bet. Thank you.
Coming up, we're going to take a look at why shares of Moderna are under pressure after the White House's latest decision on vaccines. We'll be right back. Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, let's take a look at Moderna. Shares are ticking lower, off just about 5% right now, following reports that the Health and Human Services Department is reviewing a contract with the drug maker to develop a bird flu vaccine. Joining us now to break it all down, Yahoo Finance senior healthcare reporter Anjali Kimlani. Anj.
That's right, Seana. I mean, the news for Moderna couldn't come at a worse time. The company is already looking at declines from the COVID vaccine, as well as just a slower respiratory season compared to the last several years. So the company now, with this potential review of a contract for a bird flu candidate, was supposed to be taking that candidate into later stage trials, and whether or not the U.S. government continues to fund that could weigh on the company's year. We know that they already reduced basically the outlook, the forecast for the year between 1.5 to 2.5 billion for revenues for the year, and that's down from 3.1 billion in just the Spikevax sales alone from last year. So just to give you an idea of what that looks like. Meanwhile, taking a look at just the numbers for that contract, the contract itself looking at about $500 million alone for that. And then that translates into what the outlook is also for other vaccine makers, though we haven't seen as much an impact on those stocks just yet. But it is interesting to see how the new administration is handling the threat of bird flu, which we have seen take a few lives, though it has been rare cases, and definitely affecting the animal population. So we'll see how that goes.
Yeah, can we talk a little bit more about that? The Trump administration cutting funding specifically for the bird flu. Can you update us on where the administration stands on its contracts with some of these?
Yeah, it is looking at a couple of others. So Vaxart is another company that it was looking at. We've also seen it take a hard look at just generally how it's treating vaccine makers, specifically for flu. The FDA just canceled a meeting that was supposed to take a look at and pick the strain necessary for the upcoming year. And this is around the time when vaccine makers need, sort of a heads up on how to manufacture and what strains to produce to see what's circulating. So it's not a perfect science, but it has been a tradition for so many years. And that's something that we are in a bit of a loophole right now for that. So we'll see how it goes.
Andres, you've got a lot of coverage here today. So Novavax also, I know, is on your radar. We're looking at shares up just about 9%. Earnings helping to maybe alleviate some of the concern that we've seen plaguing the stock.
Yeah, Novavax, especially because the company has sort of given investors a look at something that I guess they've been asking for some time. Lots of concerns for a company like Novavax, which is a single product that to the COVID vaccine, which we just talked about on the decline. And in addition to that, a company that hasn't had anything else really coming out of the pipeline and has struggled to really set itself apart. Unlike the way that Moderna sort of took off with the government funding during the pandemic, Novavax hit a few stumbling blocks, and there have been questions about its viability. It has warned a number of times that it may not continue or have enough cash on hand ongoing, but now we're looking at a shift in the way that the company is operating today with earnings, talking about being more of a drug technology platform and licensing that out rather than being a product company and investing in clinical trials and the like. So it handed over the reins of commercializing its COVID vaccine to Sanofi last year. And so this is the first full year that that's going to take effect. It is not yet an approved vaccine. It still stayed in authorized territory. And so that is something that Sanofi can take over. Meanwhile, moving into that drug category is going to be an interesting one for the company and its finances. Right now, looking at the numbers, $682 million for the full year for 2024, and that's compared to 682 for the full year, 91 million for the year prior. So did a bit better than expected. The quarter over quarter was also a bit of a miss. So we're looking at that sort of trend continuing. Despite that, the company stock is up because, again, giving investors what they're looking for, which is a little bit more stability, a little bit more focus on what the company can do rather than just focus on spending a lot on making more products.
All right, Anj, thanks so much for breaking all of that news down for us. We appreciate it. Another trending ticker we're watching, Palantir, once again in the red. The company breaking its 5-day losing streak on Wednesday. Palantir stock having its worst 3-day streak since 2022 after news that the Trump administration was eyeing cuts to its U.S. defense spending to the tune of about 8%. The stock hovering around the flat line right now, down about 0.2%. But when I checked earlier this morning, it was moving to the upside by about 2.5%, and it was the second biggest mover based on volume and trading activity, just under Nvidia. So certainly getting a lot of momentum on the stock as the AI story continues to kind of weigh on the broader market today. And it's interesting to see Palantir sort of hovering around that flat line, but again, struggling off the back of that announcement from U.S. Defense Secretary Pete Hegseth about defense spending being cut by 8%. As we head to break, I also want to take a look at the SOX index here. I was looking at the SOX index year to date. This covers a lot of those semiconductor names. You've got Intel as the best performer year to date, up nearly 19%. It's also, by the way, the only stock in the green today that is in the Philadelphia Semiconductor Index, as a lot of the chips names under pressure off the back of those Nvidia earnings here. Again, Intel up nearly 19%. You've got onsemi down 22% year to date, and Skyworks down 25% year to date. Some of the other worst performers in there, you've got the likes of Broadcom, AMD, and Marvell. The stocks, of course, we will continue to monitor. Much more ahead here on Catalysts.
Tesla shares right around the flat line here today after the company's market cap fell below $1 trillion earlier this week. Now, this is the latest losing streak that we have seen, erasing nearly all of Tesla's post-election gains. We're looking at even over the last 5 days, the stock has been under a decent amount of pressure over the year to date. You're looking at losses of just about 28%. Joining us now to give a bit more context on what's behind this change potentially here, at least sentiment-wise for investors, we want to bring in Craig Irwin. He's a ROTH Capital Partners Senior Research Analyst. Craig, talk to me about some of the selling action that we have seen. Obviously, it comes after that massive run-up, so we have to put that in context. But what's your big takeaway from some of that pressure?
So there was a little bit of euphoria in there, right, with the election. Politics played a big role in the run-up, and they're playing a role in the run-down, right? Investors would come back to more fundamentals. The quarter itself, when people looked at the quarter, was taken very positively because of progress on the robotaxi and the next generation platform they're launching. But the fundamentals in there were positive growth versus 20 to 30%. That's a big miss. And then obviously the margins were disappointing for many out there, although we had pointed to the impact of battery materials really helping them in the upside they saw in the third quarter last year. So, it's just it's very, very volatile because of its status more or less as a meme stock. It's a retail darling, and I think as people start to refocus on the new platform and the launch of the cyber taxi, we could start to see some positive action. And then my traders, my technical analysts, are pointing to the fact that it's come back, it's retrenched to its Fibonacci level. Usually, those are pretty attractive levels to buy a stock that trades a lot on fundamentals. So we're bullish here. We think there's good news coming. And people are getting upset about January numbers. It's really the March numbers that matter for sales. Most of their sales are really in the third month of the quarter.
Craig, I'm going to mirror something that my colleague Julie Hyman said to me today that I thought was brilliant. If a stock is a retail darling and it starts to lose favor with the retail investors, isn't that a risk to the stock long term? And I'm specifically referring to Elon Musk's political leanings as a headwind to the stock.
Yeah, I mean, listen, I cover emerging growth companies, and I've covered them for 25 years, so I watch this very closely. Musk is up to big things. He's obviously having a lot of fun working to try and make a difference for the entire American economy, for everybody in the country, not just producing great vehicles that sort of transform the outlook for transportation, which is what he's done with Tesla. So, there are people that are happy and people that are unhappy there. If he's successful, the size of this halo that he's been wearing for the last 15, 20 years will increase by an order of magnitude. So we've all got to hope he's successful because it'll help bring down taxes, help improve growth, do some really amazing things for the economy. There's always short-term winners and losers when there are changes made. So, how does this impact him long term? I'm gonna bet in the crowd that this is actually something that does improve his status and improve his overall affection from the public and the retail investors. And let's hope, because it'll benefit all of us.
That's interesting in the context, too, of some news this week. The American Federation of Teachers is pressuring asset managers to divest from Tesla. That's about 2 million investors with $4 trillion in assets. If they are successful and if that becomes a trend, how would that not put pressure on the stock?
Well, think about it. I mean, there's a big conversation in D.C. about shutting down the Department of Education. I mean, we're like 40th in education worldwide, and we haven't improved in the last several decades, outspending everybody by massive margins. So, I love teachers. I've had some wonderful teachers.
I'm less speaking about the teachers
years.
specifically and more just about investors pulling their money from Tesla. Like if that becomes a trend.
There will be investors come in. There will be investors come out. People will try and exert their political muscle. And there's going to be a tug of war. There's definitely going to be a tug of war. So, if you see some of the pension funds pull out, you'll see others come in. And that's been, that's the way this works over time. There's buyers and sellers that make a market. And, if you're kind of on the losing end of some of these moves that are largely political, I can imagine there's going to be a lot of, contention, right? People will be aggressively looking to take action for their own best interest. And I'm not saying they shouldn't do that. I'm just saying on balance, I think, let's all pray and hope that he's very successful in what he's aiming to do, because it'll really impact the broader economy and obviously lives of everyday Americans.
Greg, how big of a distraction is Musk's role in the administration to you?
Distraction to me, for Tesla, not much. For him to Tesla, maybe it's a good thing, because
Why?
The people, he has some very, very good people working for him. Mm-hmm. And he's known for being difficult to work for, right? I like to call him unreasonable, as in being someone that doesn't take a no. You get something wrong, you come back and say, this is what I'm trying next. Other people that he's fired do not have nearly as pleasant words. So giving competent people a little bit more leash to work with and a big mission sometimes actually makes them more successful. So, at Tesla, maybe it's improved focus. We don't really know. There are some major transitions going on in the EV world right now with, obviously swings in demand that started during the Biden administration, and then the price adjustments, the subsidies, the ZEV credits, all these other good things going through substantial, evolution in the market, positive evolution for the long term. So maybe it's a good thing for Tesla that he's off doing bigger things that he's having fun with. I think it's quite probably the case.
Craig, I love that take because that's not really one that we get too often. And I guess my follow-up question then to you, two parts, is one, who are the biggest drivers then just in terms of the direction at Tesla without Elon there on a day-to-day basis? And then two, does that at all shift the strategy or direction or initially what you saw in terms of Tesla's growth here over the next several quarters or years?
So I don't have a good dialogue with people internal at Tesla, right? There's compliance issues around that, and I've been bearish and I've been bullish, and I work independently. So I talk to a lot of former employees. One of the three largest buyers of batteries in the world. I won't, if I get more specific, right? We know who it is. It's a good friend of mine. Called me yesterday. I talk to a lot of different people that are involved, right? And what I'm hearing is positive, right? This new vehicle platform is something I've been asking for since 2019 when they punted, right? They've also started to open the stores in India, finally, right? That should have been done years ago. The biggest strategic fumbles at the company in the last, since its founding, frankly. We're not going into India and not launching the mini car. And yeah, the mini car would have been margin dilutive, but it would put them in a very different place today. So they're doing the right things. And speaking of the right thing, right, one of the things you flagged ahead of this was Mons, right? Mons is the crown jewel of stacking equipment for the battery industry. They've had the best quality equipment globally for decades if you want to make batteries. And lo and behold, pricing out of China, they've gone the same way as most of the other PV equipment suppliers out of Germany did, right? And now what is Musk doing? He's doing the right thing for Germany, the right thing for the industry by propping it up, by investing and supporting the jobs in Germany, the continuity of the intellectual economy around, a very important capability that is strategic. And the governments might have got there late, but Musk is doing the right thing. So, if that's what he's doing across his businesses and if that's what he's doing in government, that size of that halo is only going to get bigger. And, the long run for Tesla could be very, very exciting.
All right, Craig, always great to get your insight and talk to you. Thanks so much for joining us here this morning. And Tesla shares rebounding a bit today. You're looking at gains of just about 0.3%. Well, as we head to break, let's get a check-in on the major averages as well as Nvidia, the big driving factor. One of the driving factors in today's market action, of course, the uncertainty coming out of Washington, threats of more tariffs from the Trump administration, reversing some of the gains that we initially saw here. You're looking at the NASDAQ off just about 0.4%, S&P now actually back in positive territory as well as the Dow. You have Nvidia, though, still off just about 3%. We'll be right back.
Amazon Web Services entering the quantum computing race, the tech giant unveiling its first quantum computing chip dubbed Ocelot on Thursday. That announcement coming as more names of big tech are entering the space. Joining us now, we've got our own tech editor, Dan Howley. Dan, what can you tell us about the latest quantum news from Amazon?
Yeah, this is Amazon's first chip, and it comes after Microsoft obviously announced their own quantum chip. Google announced their quantum chip back in December, so last year, I guess. And really, this is these companies trying to already elbow each other out of position and try to get the lead in quantum computing. Don't forget, by the way, IBM's been doing this forever. I mean, they have quantum computers of their own, but this is the big tech giants, the big cloud providers trying to get ahead of the kind of quantum race. And ensure that they are the leaders. So what we have here with Ocelot is basically a form of correcting issues with quantum computing. Now, not to go too far in the weeds, but the big deal with quantum computing is that instead of bits, which classical computers use, those are the ones and zeros that translate into the apps that you see every day and how this is being streamed to you right now. They use qubits, which, because of quantum mechanics, rather than being 1 or 0, exists as both 1 and 0. So I know it's wild, but because of their nature, they're also very fragile, and so they're prone to errors, excuse me, if noise such as other atoms or something are introduced into their area. And so this is a form of trying to correct for that, to ensure that the qubits don't degrade and the information on them isn't messed with. And so this is what Amazon is pushing when it comes to Ocelot, this ability to correct those errors. And they're saying that this could help push quantum computing closer to becoming a reality. Now, that's been a big discussion. When do we see practical quantum computers? I mean, I've been reading articles from 10 years ago that said they're just around the corner. Sundar Pichai recently said 5 years. Obviously, Satya Nadella also saying that it'll be closer. Nvidia's Jensen Huang had said a couple of decades, maybe still. Other experts are also torn on where this kind of actually becomes something that you can actually use. But just to give you a broader overview, the idea behind quantum is because they use those qubits that can exist as 1 and 0 at the same time, they can complete operations that would take classic computers tens of thousands of years to complete in sometimes minutes. So this is kind of the future that they see.
Dan, real quick, we only have about 15 seconds, but I'm just curious to get your take, just the different timelines from some of these larger tech leaders.
Yeah.
Isn't that a bit perplexing? Like they could, no?
No, because I remember, maybe 8 years ago or 10 years ago, sitting at CES and having Ford be like, tell you what, guys, self-driving cars, 5 years away. You'll be having a mimosa on your way to work. Well, maybe not on your way to work, but whatever. Sitting in the back seat watching a movie, and the car is just going to drive you around all over the place. And I'm still driving around in my Honda, not sipping mimosas on the way to work. So it's, the companies like to push it. They're going to say that it's going to be faster than maybe it actually is, get everybody hyped up. I don't know. I still think that this is quite a ways off, and as far as I can tell.
All right, I love the analogy there. That we can all relate to. We could all strive for one day. All right, Hallie, thanks.
Thank you.
YouTube star MrBeast is reportedly looking to raise hundreds of millions of dollars in a funding push that could value his holding company at roughly $5 billion. That's according to Bloomberg. Now, the round will fund a holding company that has a stake in several businesses, including the social media star's video production company, as well as two packaged goods businesses, Feastables and Lunchly. Now, MrBeast is the most subscribed account on YouTube with over 350 million subscribers on the site, where his content centers around challenges and giveaways. Is the eye-popping $5 billion valuation potentially here, Maddie? And you talk so much about the creator economy and what goes into it, but the fact that this is even on the table just really speaks to how much, one, the media industry has changed, I think, two, and then two, just I was asking who was adding to this money, who was funding it, which I think is a big question going into this.
A question that would be great to get answers to, because it could add to the validity and the kind of efficacy of this investment here. But it is so interesting to see just the degree of success that MrBeast has had. This comes as Google has announced today that on YouTube, 1 billion people are watching podcasts every single month. So their investment in podcasts on platform are really successful. 1 billion is just a huge number, obviously. Also, in the context of MrBeast's success on Amazon with the Prime Video series he launched, it was the most watched unscripted series ever, according to Amazon itself. So that's not just according to MrBeast. Amazon had committed $100 million to the first season, and then now they're in debates over what that funding is going to look like moving forward. It's not for me. I don't like guy shows. Yeah, not for me.
Maybe one day.
Maybe one day.
All right, coming up next, it's Wealth. It's dedicated to all of your personal finance needs. Brad Smith has you for the next hour. We'll see you tomorrow.